Welcome to the Moonlight Real Estate Side Hustle and Syndication Show. I am your host, Eric Lindsey. Here at Moonlight, we choose to focus on achieving financial security through real estate. And today we are here with Angelo Christian. Angelo is an investor, entrepreneur, and author. He is noted as one of the top producing loan originators. He is noted as one of the top producing loan originators in the country. As the CEO of Christian Financial, Angelo has helped tens of thousands of people with his influential coaching, real estate university, wealth management, and mortgage banking.
Hey, thank you so
Without
much for
further
having me,
ado,
Eric.
welcome to the
Happy
show,
Saturday,
Angelo.
man.
Yeah, well, oh no, yeah, I'm looking forward
Yeah.
to it. And so just chatting offline, I'm really excited about the show and unpacking some of the details that you guys are doing over there. It sounds like you guys got your hand in quite a few things and you're thriving at it. And so, yeah, I'm looking forward to it. But before we get into the details on those, if you could share just a little bit more about
Yeah.
yourself
Thank you
and
so much,
also
Eric,
how
for
you got
having me on the
started in real
show, man.
estate,
It's
that'd be
definitely an
great.
honor and a privilege to be here. So, um, I I've been in the business now for 20 years, and I know it seems like a mouthful, like when you stated everything that we do, but one of the things that happens when you go deeper into a space, and even like you look at Amazon, Jeff Bezos, Elon Musk, or any successful entrepreneur, you kind of morph into other things because business is so interconnected, right? It starts as one thing, and then as you get deeper into it, you kind of pivot into something else because you're learning the business and then you have a deeper understanding. So when I first started, I went to school for finance and economics, and I didn't even know what a mortgage was. I had no idea even what a mortgage was. I looked at, Warren Buffett. I thought that was one of my heroes who I looked up to. Um, but I grew up actually very poor, and we didn't have any money, and a very low income family. And I was actually, while I was going to school, a very good friend of mine that I had ran into. I hadn't seen him in a really long time. He was doing extremely well, and he was actually in mortgage. And he's like, "Hey, man, why don't you come follow my footsteps, and you can come work at the same company as I do, and I'll teach you what mortgage is." I thought it was a scam, it was a con. I was like, "No, this is real, man. I'm making great money. My life's changed." So I went and worked with him, learned what mortgage was, and this is the subprime time. So, and then that time, I became the top lender in Texas, and then the whole market crashed. So then it went from, flying sky high to then the market crashing. And then we had to pivot. We got out of subprime and then we got into government lending, FHA, VA, and conventional. So I never got out of the industry, always stayed in it, and I always kept my same team. My team has been with me since that time frame, the last 20 years. And so we've kind of ridden the wave of finance and mortgage, and we just kept on growing and getting better and learning and learning. And at this time, we're just doing standard lending, conventional, conforming, FHA, VA. And then in 2017, as we got deeper into the space, learning about finance, we started to add business loans and we started to add private and hard money bridge lending. So we built out a whole second label in 2017 because we saw that the market was demanding this. We saw the need for non-QM, for DSCR loans, for multifamily, because conventional has a very limited scope and a lot of people don't fit that box. If you're self-employed, it's very hard to get a loan from a bank. If you're an investor, it's very hard to get a loan from a bank. At least you meet X, Y, and Z, right? So we pivoted to that and we added that label to our company just to expand and grow, to cater to more people, to help more people, because that's what it's really all about. So that's really what we've done is we've had a very good market awareness and adapting and pivoting and expanding our business to cater to what's happening in the economy. So, like for example, you asked about bridge loans earlier. One of the biggest things that's happened with inflation recently is a lot of consumers, a lot of investors. They don't qualify for the DSCR or the full documentation loan because inflation, interest rates have gone so high. It's caused investors to switch and flip to bridge lending because there is no debt service calculation. So we had to pivot to that and add those products in order to be successful, in order to meet our customers' needs. Because with rates at 8%, 7%, it's hard to make a 24 unit cash flow. right? So you have to have other products that are there to help your customer along the way. So that's how we got started, and where we are today. We've last year we lent the 2024 103 million is what our production was. And our goal right now is just to keep expanding and growing. We think 2025 is going to be a phenomenal year, and so we're just getting suited up and getting ready, man.
Okay. Yeah, that's a really unique background, and to hear that you guys pivoted and was able to get
Yeah,
traction, and you're paying attention to the market, and that's what good entrepreneurs do. You pay attention to exactly what's taking place
right.
around you, and you adjust your business model to be able to capitalize on that. And so that's really good business practice there. And you also mentioned bridge lending. Are you seeing a
Right.
lot
Yeah.
of operators still going down that road
Yeah,
with
because
the
depending on the
floating rate debt?
situation, I mean, because so we have in our bridge products, we have soft money, private, hard, and then extreme hard. And depending on what the situation is, like I was telling you earlier, like we had a loan in San Diego, and he did a cash out refinance. He owed like 800,000. Property's worth like 5.5 mil. We gave him a loan for 2.2 mil. He needed cash for his business, but he had a 480 credit score, so his bank is not going to make a loan to him, right? So he needs cash right now to keep his business going. We funded him pretty much no questions asked because the LTV was so low for us, and it was a phenomenal location. So in a situation like that, you still need bridge financing, or if the property is completely distressed. You see a lot of investors right now, they're either doing obviously fix and flip, but a bigger thing that's come online is fix to rent. What we're seeing now is a lot of investors don't want to get rid of the properties, they want to keep them. So in that example, you still need bridge financing because you need the money to either do ground up construction or rehab, and then after that you can convert it to long-term financing if you want to keep the property. So there's still a huge need for bridge financing, and we offer it nationwide. It just depending on the situation. We're seeing that a lot of investors are not able. They're not, because the space has gotten so crowded. There's so many people chasing yield. The idea of doing a fix and flip or finding a multifamily is kind of de minimis. So they've kind of, a lot of investors have resorted to ground up construction. So this is a big thing that we're seeing, that you, instead of, because it's so hard to find a multifamily, the right deal. So what we're seeing is a lot of people that are building. So we're giving the financing to purchase the land, get the entitlements, get the permits, get the construction loan. And then if you want to keep it, convert it over long-term financing, or if your exit strategy is to sell, just get rid of it. There's no prepayment penalty on the loan.
Okay. And so why are you thinking that this ground up construction is starting to take off so much? Is there anything that stands out that supersedes or
I mean,
just is a better
so
vehicle than
what I mean, we're
multifamily
seeing it
as
from the
of right
demand,
now?
the consumer demand, the amount of leads and customers are coming in. It's more and more because investors such as yourself. How hard has it been the last 2 years versus 10 years ago to find the right deal? How many shows are online right now about become the next
Yeah,
real
it's
estate
tough.
guru, the next king, and all these people going to chase it? So the it's really hard to find good deals. So it resorts people to, if you can't find it, build it. You know, so that's kind of what we're seeing. A lot of people that are in the space that have the resources to build. That's what they're doing.
Okay. And so is that the build to rent model that you're referring to, or is that just residential
It could be, I mean, it's all
houses
of the
within a
above. It could be
subdivision?
multifamily ground up construction. It could be subdivisions. It could be townhomes. It could be condos, assisted living, senior living, RV, mobile home parks, anything that is going to be bringing a return, um, is what we've seen investors that they're doing. They'll buy the dirt, for whatever. We'll finance the land and then bundle that into the construction loan, and then give them the funding for that. And then it's up to the investor if they want to sell it to like a hedge fund, or they want to sell it to a REIT, or they want to keep it. So, but we're seeing a lot of course, there's still people that are doing deals for existing properties, but it's not like how it was. I'll tell you this, like 7, 8 years ago, 10 years ago, there was a lot more deal flow for existing properties than there is today. And we're seeing a lot more demand for the guy that wants to get the construction loan and build, 80 units, because he can get it at a lower cost basis, and he's got the right location. So it's a lot more work. It takes a lot longer. But I mean, what are the alternatives?
Yeah. Yeah, I am starting to hear about a lot more individuals getting into the development space and building things out all the way from the ground up. And so some really popular individuals that was known for going about buying properties that existed. Now I'm hearing a lot of those guys going out and venturing into the development side of things. So I can definitely see
Yeah.
exactly where those trends are taking place within the marketplace. So that's great. And what type of interest rates are you guys offering on these bridge loans? What are you guys seeing on bridge lending as of right now
Um,
in Q1 of
it
25?
depends on, obviously, there's many different circumstances. Let's just say that on the best side for a very experienced sponsor, LIBOR plus 400, so maybe about 8.5%. And then for somebody that with less experience, less liquidity, 10%. And then if it's just asset based, no credit, 12 to 14%. So it just depends on the situation.
Okay. And so are you guys loaning doing loans for residential loans and commercial?
Yeah,
I know the
yeah,
commercial side, but do you guys do anything
absolutely, yeah.
for the
So we have
average
our
homeowners as well?
our standard
You
lending
guys being
label where
commercial
we do
brokers?
like conventional, non-QM. We do FHA, VA, veteran loan for veterans, first-time buyer. So like we could do multifamily FHA down payment assistance up to 50,000 for first-time buyers. So yeah, I mean USDA Department of Agriculture for rural areas. So yeah, if someone's trying to buy their primary home, we also offer funding for that nationwide. The only state for primary that we don't lend in is New York, but everywhere else we lend in.
Okay, and you guys are hard money lenders as well for
We
residential
are,
and
yeah,
of
hard
course
money. So
bridge
hard
lending for
money
the
and private
multifamily,
lending is for
correct?
single fam for residential and commercial and industrial, and then the standard lending is just for the residential. So
Okay, and what are you saying as far as rates for hard money loans? So for the person that's looking to do a fix and flip or looking to attempt to do a burr, and they're buying a property that really needs some rehab, they buy the property, they fix it up, they do the renovation, they get it rented out.
right,
What type of
yeah.
loans are you guys, or interest
For
rates
hard
are
money,
you
the
guys
rates are
providing
starting
on
at
those?
10%, and then the long-term financing is around 6.5% for a 30-year fixed. Mhm.
Okay, and how about appraisals?
Yeah,
Do you guys require appraisals, or is there anything that people need to know as far as things that they need to check the box for before coming to you, or at least they can be
yeah.
prepared
So
for when they do reach out
we
to
do
give you a
require
call?
appraisal, but us as the lender have to order the appraisal. We most likely won't be able to accept a third-party appraisal unless it was ordered through another lender. So, like if you, let's say you want to get a loan from us and you order your own appraisal on your own, most likely that won't be able to be used. We'd have to get it from, if it was transferred from another lender, but we prefer to order our own appraisal through our AMC, our appraisal management company. And so, yeah, as far as checking the box, I mean, the thing is that we help you whenever you do the enrollment with us to structure the loan to get it approved. The biggest thing is that just making sure that your credit is, at least you have good credit, and it doesn't have to be excellent, but if you got like, I would say it's gonna be a lot harder to get a loan if you have a 500 credit score versus a 650. So, work on the credit, make sure your bank statements look good, try to get some reserves at least, 3 to 6 months reserves. I would not apply for a loan or talk to a lender if you're broke. It's not going to, I mean, unless you're doing an asset based loan. And if you're trying to get any type of, fix and flip or bridge or whatever, or rehab, you just want to be polished. You don't want to go in there and, have your credit all messed up and then have no money. You want to make sure that it's looking good.
Yeah, that's a part of the process. You definitely want to get out in front of it, and make sure that everything is going to be a smooth transaction and a transition as you go through the loan process. Because if you show up and you don't have your ducks in a row, it's just going to drag the process out. And if you are under the gun and need to close really quickly, you're gonna really want to have all your things together so that it can help expedite the process.
It's kind of, I don't know, man. I see this. It's kind of a sad thing a little bit that a lot of people, they think that, I'll give you an example. Like, they put the cart before the horse and they find the deal, but they don't have a loan secured. And then they're in a hurry, they're scrambling, and then they don't, but the lender's not going to, the lender doesn't care that you're in a hurry, because we have a huge compliance and regulatory side that we have to follow. And if you're out of contract, you're out of contract. But that's why we're so big about getting pre-approved, be proactive up front to make sure you got your loan secured before you go under contract.
Yeah, and also for the investment side of things, it's so valuable to have a relationship with a mortgage broker, because I could personally attest to it. We went under contract and we started scrambling after we went under contract to establish some relationships with some banks, and we were trying to save money on not hiring a mortgage broker, but over the long haul, it was a mortgage broker that got us to the finish line. So if you could speak to the value of having a knowledgeable mortgage broker on hand, and having that relationship already pre-existing.
Whether you go to a doctor, right? You want to have the best doctor that's going to consult you and guide you, because you don't know. I mean, you may not know about the heart, you may not know about the lungs or the liver, and so you have to have an expert that can say, hey, you got to do X, fix your diet, go on exercise, do X, Y, and Z, take this, don't do that, stay away from this. And you need an expert that can counsel you and guide you. And so the same thing is with lending. If you're doing multi-million-dollar deals and you're flying blindly, and you don't have a team around you, how are you going to scale and be successful? If you look at anyone that's successful, and I don't care what industry it is, they have a solid team. If you're in real estate, you have to have a solid team. Not just lending, you have to have the right accounting people, the right crew, the right marketing, the right development, the right fulfillment. So, I mean, mortgage, if you're going to be in real estate, you have to have the right lender in your pocket, and then consult with them. They'll tell you, hey, what do you have to do to prepare to be successful?
So that begs the question, what's the best way to start and cultivate a relationship with a mortgage broker?
So what we do is we tell people, give us a call. We set up a meeting, assess your goals. What are you trying to do? Tell us what you're trying to accomplish. And then we put together a package. We don't charge any upfront money. There's no contract, but we put together a comprehensive analysis, a package of what needs to happen, the documents we're going to need from you, what you're going to have to do to be ready to get this loan, to get the funding. And then we work on it with you. Then we can either get you a proof of funds letter or a pre-approval based on once we build out your file for you. And then that way, when you go out into the market, you're going to be successful.
Okay. And so is there certain properties that you guys try to stay away from on the residential side? And is there certain properties that you try to stay away from
on the residential? Like, we don't like anything under 100,000, we're not going to fund. Small stuff, anything that's like where we're not going to be good is very small deals, like 30,000. I know that some lenders do that, or some investors target that stuff. We're not good at the 30,000, 20,000, 50,000. We just don't have any market for that. And then if it's very rural area, if the population is like 10 people or something, we're we're gonna have a hard time, funding that. And so, and then on the commercial side, it can get a little dicey, like with gas stations, or stuff where there's a lot of environmental or dry cleaning. So you just, we do them, but there's phase one and sometimes phase two that's required, because of some potential environmental concerns.
Okay. Hey, and before we started recording, we were chatting offline. We were talking about how
Mm-hmm.
sometimes you guys take properties back as hard money lenders, as bridge lenders. Speak to that and speak from the perspective of, let's say a listener decided that they wanted to get into the mortgage lending business or the bridge lending or the hard money lending business. How do you guys take back properties and how do you guys actually operate these properties? Because some of these deals you guys actually
Yeah.
are operators on now. When you take the properties back, now you manage them and they become you
Yeah.
guys' assets. So
And I
speak
do
to
want to
that
say
side of
that
things.
so we don't, uh, when we started in 2017 doing private lending, we didn't go in with the business mindset to repossess properties. It kind of happened as, a byproduct or side effect of being in the business. So we thought, I guess we were kind of naive that everyone was just going to pay us on time, you know. And we learned quickly that,
Mhm.
sometimes people don't want to pay you, and it's either because they can't or they won't. So as a result, we started to get properties back, um, and we realized, instead of selling them, some of them, that a lot of these properties had a lot of equity. I was telling you about the one in Dallas. We had a loan on it, a balance of like 2.2.
Mhm.
It was a 24 unit, brand new construction, worth like 6 million. So you could never go and buy that or build it for that price. So it's like, well, why would we get rid of it? So it's like, okay, we can refinance this, take the cash out, and then lease it up, and then just keep the rental income. It has 400,000 NOI. We can keep it, or we can sell it to a REIT. We decide to keep it and build our real estate company. So, and that's kind of what's happened pervasively, over the last 8 years. We've just added more and more properties. The ones that we want to keep, we keep them in the portfolio. Um, and it could be for various reasons, but ultimately it comes down to people, unfortunately, they are not able to repay us. So we have no choice but to take the property back. And it's turned out to even be more lucrative than the actual lending side of the business, and we didn't even know when we got into it, we had no idea about even thinking about that.
Yeah, I mean, it would be similar to the bank because we're getting these large loans. So 75% debt or 70% debt from the bank, and some of these guys are um, defaulting on their loans, and so the bank has to take back the property. But most of the times, the
No.
banks aren't really that interested in operating the properties, and so, but where you guys can capitalize on it is that you're private individuals and you're able to operate and you actually want to
No.
operate, and it's become extremely lucrative for you guys. So good for you guys. It sounds like you got a really great operation. Not
No.
that you want to take advantage of someone or hope that someone defaults and you can capture a really great deal,
Yeah.
but
And
just
we
in
know
case it does
we try
happen,
to
you
work
do
with people the
have
best we can. Just some
a branch
people,
for that.
they just, it turns out like we'll do loan modifications or we'll do forbearances, because it still is a lot of work, and we made a lot of mistakes along the way. But sometimes, man, they just, people, they'll either ignore you, disappear, and obviously we got to take care of the company. And so, yeah, I mean, if we have to do it, we'll have to foreclose on somebody. And then, yeah, but it's turned out to be, and a lot of private lenders that have the bandwidth, they're doing this, and yeah, I mean, we built a whole other company out of it and have a whole other team managing it. And it's been really good. It didn't start out like that. In the first few years, um, it was very stressful because we didn't know what to do, but we figured it out along the way. So
Yeah. So, have you guys had any clients in trouble with the floating debt from
Mhm.
22, in which the interest rates began to get hiked up, or
Yeah,
has
we've
there
had
been
to.
any trouble along the way?
It's either been where, yeah, I mean, they're on, Prime Plus whatever or LIBOR plus whatever, and their rate shot up. We've either had to modify their loan, or give them an extension, or they've handed us the property back because they couldn't support the debt, or what we would do if they were on a bridge loan, we would move them over to a long-term loan, to cut their rate. Like, for example, if the bridge loan started at 8 and it went to 12, then we would just convert it over to long-term financing, get it back down to like a 7%. But some people, they were damaged so bad from inflation that it killed their credit and their liquidity, and then they couldn't even qualify for anything. So the
Hmm.
only option was to sell the property or do a deed in lieu. You know.
Okay. So there was no way to take on extra
Some
equity from outside
Yeah,
of their
I mean,
group to somewhat
sometimes,
float
yeah, if somebody had
float
additional
the
collateral
float
they
the
could
deal.
pledge. I mean, it depends on the when you know how it is when you're dealing with multitudes of different people and sponsors and investors. Some people got a ton of collateral that they can put up and ride it out, and some people don't have anything, or they lost everything because of inflation, because of this whole last 2 years with. So it depends. Yeah, I mean, we always look to try to figure it out, right? Um, Whether it's refinancing, putting up additional collateral, whatever. But sometimes they lost everything, and they don't have anything else. You know, like we had a developer builder in Austin, Texas, and he lost pretty much all of his assets. So we helped him to sell the property and get out of it. You know, and he was able to. We helped him finish the project and then help him sell the property to get out of it because he couldn't make the payment anymore.
Yeah. Yeah, and that's pretty unfortunate that
Mm-hmm.
so many people were impacted behind that, but
Yeah.
it was a bull market for a long time, and if you get away from being conservative and start going after things and being really aggressive, things
Right.
can start going downhill really quickly on you. And so it sounds like that's exactly what took place with
Yeah.
a lot of individuals, and it's pretty unfortunate. So, hey, Angelo, if someone wanted to start the loan process with
Yeah.
you,
I mean,
how would they go
so
about that process?
obviously we're open 7 days a week. Our agents are here, our reps. We have nationwide um, lenders here. You can call or text our office 832-431-6331. You can also go online to our website, official Angelo Christian. Obviously, on our social media, we have a podcast, Real Estate Insider. You can check us out on Instagram, YouTube, Facebook, TikTok, Angelo Christian. You can click on a link there to enroll, and you go online. There's no cost for enrollment. There's no hard credit check, so it doesn't affect your points. Or just give us a call, and then we'll set up a meeting.
Okay. Well, Angelo, you've been a wealth of knowledge. Just chatting with you offline and then now on, it's been absolutely amazing. And anyone that gets connected with you, I'm sure they'll be in a much better place
Yeah,
in the near future. So, once again,
absolutely.
thanks for
Thank you,
coming on
Eric.
to
It's
the
been a
show. We'd
pleasure.
love to have you back anytime.